One of the questions that I get asked, hey, is it worth it to use a HELOC? Some of my clients bought a home in San Francisco or Los Angeles after the 2008 housing crash. And guess what? Their properties have skyrocketed in value. So they have reached out to me and said, what could I do with that equity? Homes in California, especially in the Bay Area in LA, were selling for pennies on the dollar. If you had a cash and a guts, maybe you bought a single family home in San Francisco for like $500,000 or a fixer in LA for $300,000. Now, that same house is likely worth $1.2 million, maybe even $2 million, depending on the neighborhood. So in this video, I'll explain how much equity you might have and how you can use it to grow your wealth without selling your home, instead by using a HELOC. How much equity do you have in your home? Assuming you've never accessed your home equity, meaning you only had your mortgage on your house. Calculating your home equity is pretty straightforward. Take your home's current value, minus money that you owe on the property, and the difference is the amount you have in home equity. If you have a loan-to-value or LTV at or below 85% and a credit score of 620 or more, you have a high chance to qualify for a HELOC. In this example here, $200,000 divided by $1.8 million is about 10%, meaning you owe only 10% of your current home's value. So you are good. Now that you know how much home equity you have, let me explain what a HELOC is. Then I'll go over the pros and cons. And finally, I'll walk you through the situations where using a HELOC makes sense and when it's probably not the right move. So what is a HELOC? A HELOC is a home equity line of credit. Think of it like a credit card backed by your home. You get approved for a credit line. The amount you can borrow is based on how much equity a lender is comfortable allowing you to access from your home. And you only pay interest on what you use. It is a revolving, use it, pay it back, use it again. Usually interest-only payments during the draw period, first 10 years. Great for projects, investments, emergencies, or even creating passive income streams. So instead of selling your house or doing a full refinance, you keep your low tax base, keep your home, and gain access to serious liquidity. Now, you might say, but Lisa, I don't want to take on more debt. I understand that you're nervous about taking on more debt, but not all debt is created equal. When used strategically, debt can be a powerful tool for building wealth. If you're using it to invest in assets that grow in value or generate income, that's considered a smart or productive debt, not a burden. The key is to have a clear plan and use it responsibly. How much HELOC can you get? Typically, you can get up to 80 to 85% of your home's value, minus your existing mortgage balance. Using the same example, 85% of $1.8 million is $153,000 minus $200K, so you can get up to $1,330,000. What if you don't have any mortgage left? You own your home free and clear. Let me share one of my clients' actual stories with you. They bought in 2009 for $550,000. Now it's worth about $1.5 million. 85% of $1.5 million is $1,275,000. Now, since there's no mortgage, the HELOC amount is the full $1,275,000. So they decided to use it as a down payment on an income-generating property. And if your home is worth $1.2 million, HELOC amount can go up to $1,020,000. If your home is worth $1.8 million, the amount can go up to $1,530,000. And if your home is worth $2 million, HELOC amount can go up to $1,700,000. Now, I want to go over how smart homeowners are using their HELOC. Invest in real estate. Use your equity as a down payment on an income-generating property. Start a business. Fund your passion without expensive business loans. Renovate your home. Increase your property value even more. Fund college tuition. Help kids or grandkids without taking out private loans. Bridge loan for another purchase. Secure your next property before selling. So you're not spending the equity, you're deploying it. Think of it as converting debt money into working capital. But wait, what about the interest rates? Yes, HELOCs have variable rates. That's why you need a strategy. If you're using it short term or for investment purposes with a clear exit plan, you're still in control. And no, this isn't about going into debt. It's about using leverage responsibly to build assets, not liabilities. If you've been sitting on the equity for over a decade, it's time to put that money to work. So schedule a quick call with me. Let's see how much you can unlock and what strategy works for you. Every lender is a little different, but I can help you run numbers based on your property and financial goals.